Traders, Richard K from Price Action Income, and welcome to another market geometry video. In this video I want to again look at expanding triangle formations or corrections. Now, I've done a little video about this previously on this YouTube channel, so if you are interested in that, then please go have a look at that. But these patterns really starting to fascinate me quite a bit, because I've started applying and really started researching these patterns in more detail. Obviously, like I mentioned in that previous video, they tend to appear in really volatile situations. And they are very volatile by nature. Now, as you all know, I try to find the end of corrections, and when I believe a correction ends, I would like to trade in the direction of the major trend. Now, as you all know, that expanding triangles, or should know, expanding triangles, as the name suggests, basically refers to a pattern or a correction that starts at an origin point and then fluctuates above and below a center pivot, if you want to call that. And it expands and expands and expands until it ends, and then a reversal appears. Quite often these reversals will be quite volatile, or say one directional, but in any case they make great trades or great opportunities to trade. So in this video I want to be showing you, and I'm going to be actually showing you a little bit more of the market geometry side behind triangles and some of the new techniques that I have identified using this. So hopefully this will be useful for you guys that aren't interested in these sort of patterns. So as you can all see here, since about, when was it, around the 10th of September, this was actually a trade that myself and my members took. We identified an area where we thought an expanding triangle, and you can see from the shape. Before we look closely, just quickly show you the shape of what we thought was an expanding triangle, and we got into a trade here and we managed to take profits all the way down. But then soon afterwards, price then started moved upwards again, which made me think that that expanding triangle did not end here, in fact, and actually as it moved up we identified a new area and zone which we traded from. So we actually had two opportunities, first thinking that that triangle was finished over here, but we managed to get into it again. Alright, so let's quickly have a proper view by zooming into this chart on the Canadian dollar Swiss franc. And let me just quickly show you how we first thought that this might be a triangle. Now, as I mentioned before, prior to a low, price started fluctuating above and below, sort of from here, which made me think that this was the origin of this expanding triangle. Now, just like your symmetrical triangles, you will find that they are labeled as A, B, C, D's and E's. So 5 waves to complete an expanding triangle. And as I mentioned before, we took a trade over here. I won't go into that in too deep detail, but we wrote it down. Price just pipped that previous low here on the 21st of September and then reversed to the upside, which made me think that perhaps this triangle did not end at all. So what I'll show you next is the actual market geometry that I used to determine an area where I think this pattern would end. And then I'm going to also show you something new that I've been working on to place targets with, and how to use these market geometry techniques to greatly increase your profit potential and knowing where to place your targets, if I can put it that way. Either way, so we took this trade and then price started moving hard and fast back to the upside. So this made me think that obviously I need to re-evaluate my labeling over here. And this is how it was done. So I first still considered this as the origin point of this triangle. So having an A, then a B, then a C, then a D. That D that just put this low here on the 21st September with an E wave going to the upside. So a pretty large looking expanding triangle. And this is what's really cool about expanding triangles. If you want to figure out where your E wave might end, I've seen this over and over and over again. So this is a good rule of thumb, is to attempt to use your shift or your standard pitchfork setting, sorry guys, and attach your starting point or your first anchor point at the origin point of where you believe your expanding triangle started from. Then take your second anchor point to the C wave and your third anchor point to the D wave. So the two last swings prior to where you believe your E wave might end. In this case, look exactly beautifully what happened over here. Price pipped the upper median line of this pitchfork, the standard pitchfork setting, guys, not the shift pitchfork as I normally would use. Let me just show you that quick. Because we want to slope a pitchfork upwards in the direction of this correction. So in this case, the only one that would have worked was the original setting. In any case, guys, this wasn't done in hindsight. We were actually waiting for price to reach this upper area and wait for a reversal before we entered. So that's a quick technique for you to use your standard pitchfork setting to figure out where an E wave might end. Now, something that else is really, really interesting here and that I've been working on and researching in my own work is that when you run a ray and start also from your central origin point and run it to where your handle, or can I say this, this section and your 50% dashed median line, which is this dashed green one in my example, where they cross, and look what happened. Price failed to get through that line over there. So this is more of sort of a timing line, if I could say, and also just another layer of market geometry that you can work into price there. Another thing that was really cool here, and this is something I've shown in that previous video, is if you would run a parallel channel and you run it from the top of where you believe is your A wave and run it horizontal. So I wouldn't really say this is so much a channel, but rather see it as a sort of a channel that defines a range. And run it from your A wave to your B wave. And you'll probably see this in the previous video as well, that you'll quite often find that if you then double this up, you copy and paste it, and double it up to the upside, then you see within a width of a hair, the E wave nearly ended up at double the range from your A to your B, ranged up to the upside, and it nearly made it to the upside there. So now we got this timing line, we got the upper median line of the pitchfork, and double the range between the distance from your A to your B, and double to the upside, all pointing towards a potential top that could have resulted in a high. In this case it did. Obviously there's more to this, guys. We don't just jump into a trade, we look at different other things like momentum divergence, reversal candlestick patterns, and so forth before we would enter. But that's how you would, with an expanding triangle, figure out where an E wave might end. Now let me just quickly get rid of these horizontal lines, and this is where I want to delve into target placements. Now, if you entered over here quite often and you had this reversal and you managed to enter in your own trading, if you have enough space to at least place a target that would make sense, that's larger than where a stop would be. In this case, a stop would be above this E wave or the proposed E wave that you think you're trading. If there was enough space, then obviously a great place to place it. Your first target would be at center median line. But in this case, that wouldn't have given you a good reward versus risk ratio. Now, this is where, like I've done with this ray over here and projected it through this 50% dashed median line from the origin point where this started from, if I use another ray, again starting at the origin point that you believe your triangle started from, and you run that through the lower 50%, in this case obviously the market going down, then look at how cool this is. Price just pipped that, and this is where I'm starting to do my own analysis and my own research. I'm going to start placing my stops. And as you all know, or if you're not familiar with my work, I like trading with two targets. And if you do the same and go to just where the end of your second, or how can I say, third pivot of your pitchfork was placed or anchor point was placed, then look where the market reversed from now. Guys, this is just one example of applying these market geometry tools to expanding triangles, but I'm seeing this repetitive nature using these techniques or repeating all over and over again. And once you start seeing these sort of behaviors happen over and over again, then they make really good, steadfast rules to where you can set targets. In this case, price would have reached your first target, and then also take out your second target. Just to be dead honest, we traded this one down, we reached two targets, and then when we traded this one, we actually got stopped out in all this volatility. So this is one reason I wanted to shoot this video, just to show you guys that where you can place your targets as well using these market geometry techniques. And I just want to scrunch up this chart again. I want to show you another example. I've made a little mark over there so you can see what I mean. Now, this move into that high over here, to me, started looking like an expanding triangle, but having an expanding triangle end there, and then have this massive move to the downside, this would not have been an expanding triangle. It probably was some sort of first wave up, A, then a B, and then a C wave up. But what I want you to focus on here, and this is something again that I'm seeing with an expanding sort of pattern moving into an eye in this case, and not an expanding triangle. But again, at the center point, we have an A, or we can in this case say 1, 2, 3, 4, 5 before this top came and price moved lower. Now, if you run, and guys, this is not an expanding triangle, just want to clarify that. But if you use your last two swings, which would be that one and that one, again using a standard pitchfork, it caught this high beautifully. So quite often you'll find that elevators will tell you need 1, 2, 3, 4, 5 waves into an high, but I also quite often see that it's very important to take note of how a price actually gets there, and was sort of fluctuating up and down, up and down, up and down into an high, which was actually a beautiful stop here right at that upper median line of that green pitchfork again. Now we use the same sort of principle here and run that through the 50% line or median line of this pitchfork, then it very nearly gave us that high as well. So that's a way you can deal with tops, especially when you see tops that fluctuates into an high. If you're interested in this, I've got some more examples of expanding triangles that I've done in other markets, but just not to keep this video within a sort of a manageable time. If you guys are interested in something like that, shooting another video like that, then just please let me know. In this case, if you ran a raise again through your 50% dash in the bottom where you had your third anchor point, then price would have reached these targets as well as price started moving downwards. Again, this wasn't a expanding triangle, but it had sort of a nature of price fluctuating up and down before we had an actual high. Alright guys, so that concludes today's video. Thanks very much for watching. If you haven't done so before, then please hit the like button and notification bell to be alerted when I do release another video. And I hope to see you around in the next video. Thank you very much. Goodbye.